rough day for Netflix, and this chart tells the story. You can see that it popped after yesterday's earnings. Look at that little Matterhorn-like rise there on a quadrupling of profits. But shares gave back those gains today, trading at 8 times their 50-day average volume, with more than 17 million shares flipping. So why the incredible rise and then sharp decline all in just 2 trading days? Julia Boorstin has the story.
Why did Netflix shares pull back dramatically after better than expected earnings? CEO Reed Hastings said this on the earnings call Monday.
Every time I read a story about Netflix is the highest appreciating stock in the S&P 500, it worries me because that was the exact headline that we used to see in 2003. And, you know, you can definitely, we have a sense of momentum investors driving the stock price.
Despite the pullback, Netflix is still one of the best performing stocks in the S&P 500 this year, up about 250% so far in 2013. Supporting those gains by beating analysts' projections for the third quarter and issuing stronger than expected guidance for the rest of the year. Investments in exclusive content like Breaking Bad and Netflix original shows like House of Cards and Orange is the New Black are paying off.
Pow! They're definitely coming out of the starting from scratch in original programming and doing a lot better than I think anyone expected, and that's a large part of why the stock is where it's at today.
One of the most important numbers in Netflix's quarterly earnings are subscribers. The company added 1.3 million here at home and 1.4 million overseas, laying the groundwork for big plans for international expansion. After Netflix's huge run in the past year, its ongoing growth depends on a few other things. Whether the originals, it turns out, continue to be big hits, if it can secure more deals with cable companies to gain access to more U.S. homes, and how it manages content costs. For Nightly Business Report, I'm Julia Boorstin in Los Angeles.